Welcome to Markets Now. I'm Michelle Rook along with John Heinberg with Total Farm Marketing. Grains leaning mostly higher on Tuesday. Livestock futures mostly lower except for live cattle futures. So let's start off, John, talking about soybeans and meal. Double-digit gains in the soybean market. I know we sold off hard here recently, so is that just some short covering activity because it's end of the quarter and end of the month, or what?
It sure feels like it after such a hard sell off, especially with the big report in terms of price volatility coming at us here on Friday. That this market just wanted to pull some money to the sidelines. We still got to keep an eye on those supplies, though, in the front end. I mean, we're still down to 210 million bushels of carryover. Those supplies are going to stay tight, so maybe we're seeing some money just kind of pick back up here, especially since we got that export inspection number last week, which is a little higher than we anticipated at 880. 1,000 tons, so that's just going to make the demand side still looks a little bit supportive here. We'll see how we get ready for the report here at the end of the week.
Yeah, we'll talk a little bit about the report here coming up, but let's talk about wheat because is that market seeing short covering as well, or were we putting in a little weather premium in different areas?
I think it's a combination of the two. We've seen the funds starting to move out of that big short position in wheat a little bit last week. Now that we got the commitment to traders numbers kind of back up to date, and then on top of it, watch those ratings for that KC wheat crop continue to be very, very poor overall. Then you got some concerns maybe with that spring wheat and the planting pace. There's still a lot of snow and a lot of cold temperatures in that northern tier that might delay that crop. So again, you're seeing a little bit more, species specific price move here in terms of the KC and the spring wheat, or the red, the North Minneapolis wheat versus the Chicago,
Right.
Which is obviously still battling with the Russian prices and global demand concerns.
Very quiet day in the corn, but we did see bear spreading. So is that just some profit taking on bull spreads previously, or is that market just starting to get tired, or what?
We saw a really big move in that old crop, new crop spread, the July over December, May over December, when we've got that Chinese business, and the export business still is continuing. So that should still stay supportive overall. But again, we popped this out pretty quickly, some profit taking on that side. Plus just the nice move here, and that December crop numbers too. We held 550, fell a little bit undervalued. Obviously, we need to see what the acres are going to be on Friday.
So the December corn right now, does it need to put a little weather premium in just because of what you said before about spring wheat planting concerns? We have the same concerns with the corn, don't we?
In all these markets, we took a lot of premium out. So I think the fact that we're bringing a little back in here, corn planting is going to be something that will be on the radar because of those northern weather conditions. I know it can change quickly. In the south too, we got some heavy wetness through these last couple of storms. We're already pushing into April here, and temperatures don't look like they want to warm up too much across the Midwest. So that per planting concern might still build some premium in here in the short term.
Yeah, and export demand, as you say, has been holding up the old crop contracts here, and cash basis levels have been strong as a result of that. Do you anticipate we're going to see more export business? Is there more in the pipeline?
I think it's still coming. I mean, right now we're still the only game in town, realistically, when it comes to corn prices and the value globally in the export market. That's one thing the market's going to keep a fine balance here. We had to kind of drop prices to get the demand to kick in. Do we rally them and shut it off again? So that's going to be a fine line. I think keeps this market kind of lidded or limited in terms of its upside here, unless there's a true news story. But right now we seem to be the only game in town, and the export numbers are starting to show that in terms of those weekly sales. If this pace continues, that USDA might have to move that export number back up on the next set of USDA reports.
So let's talk about the reports. Prospective plantings, most of the average trade guesses show an increase in both corn and soybean acres, but because we've had such a big sell-off coming in, does that make a bearish report does it buffer it a little bit, you think?
This report will always bring some type of volatility to the acres reports. Throwing the stocks numbers are the most volatile reports of the year. So,
Right.
We'll expect some type of surprise. But, again, the market's thinking around that 91 level. I think that's fairly priced in here at this time frame, as long as we don't get, in terms of corn acres, as long as we don't get some big surprise that could really send this market one way or another. I mean, if we're at the lower or high end of that range, you're going to see prices move fairly violently, I would assume, in that regard. Same thing on the soybean side. Now, they're more worried about a downside miss if we miss on the lower end of that, with our tight supply picture. This market's going to need some premium to possibly get some shift in acres as we get closer to planting.
Yeah, 87.5 is probably already built in, so anything below that would be pretty bullish, wouldn't it?
Yeah, I think so very much. Again, just because of the supply picture, and even though that big South American crop's out there, there's still a lot of global demand for beans.
Yeah, definitely something to watch. Okay, let's move over to cattle. We had nice appreciation in prices the last couple of days here. Today it looked like we were kind of consolidating. Are we just kind of waiting, though, a little bit for the cash trade to I guess, catch up here or what?
I think that's kind of the focus. We've seen retail values kind of firm up a little bit again, but cash trade's been soft the last couple of weeks. Expectations that maybe we get a little bit firmer this week. So we're just seeing if the Packers going to step in. The market doesn't want to get out too far in front of its skis here, especially if cash trade does not come through in the vein that we're seeing. But again, you're talking beef production down about 4% year over year right now. So as we're getting closer past the Eastern window, hopefully that retail demand and that grilling window starts picking up, and then that should boost that cash market a little bit.
Certainly a lot of talk about higher cash this week. We had bids already being surfaced on Monday. And so are you in that camp that we could see higher cash, which will continue to push the board here?
I think so at this stage. From just talking to producers, it seems to be the theme that's out there. And then the board in that case, June got itself a little undervalued, so we're trying to catch up and did a good job of that here, on Monday's trade. But trading underneath that cash market just gives a little value to this board going forward.
Hogs a little profit taking again here today, or is that some squaring up here ahead of this hogs and pigs report?
Quarterly hogs and pigs will be a fairly big number. Really curious to see what some of these numbers are, because obviously slaughters are running ahead of where we thought they would be at this time frame, and that's been weighing on the cash market. I'm still very uncomfortable with the hog market. That feels like a low is in, but we've said that before. And then this market could rip back to the other side. I don't like the way the cash is trending right now. Be nice to see those retail values continue to get some footing here going into the end of the month.
Yeah, slaughter numbers are running above where the hogs and pigs report said we should be. So do we get any confirmation in the report, John?
I would assume we're going to get some adjustments in the back months to the upside in terms of those numbers. Again, we're just, seeing that slaughter pace where it is. That's just been the wet blanket on the hog market, preventing any upside rallies.
Yeah, and every rally seems to be sold here recently because the funds, they're actually short in that market now, aren't they?
Yeah, they were sitting about a little over 16,000 contracts, which is a very large short position. Now we'll see where things go with the little bounce we had earlier in the week. To me, hog markets, cattle markets like the V bottom or V top sometimes. So it felt like we were maybe doing that. But, today was a consolidation day, a little squaring up in terms of how trade went on Tuesday. We'll have to see what it brings us going into the end of the week.
Thanks so much for your time as always. That is John Heinberg with Total Farm Marketing and Markets Now.